What is up, guys? It's your boy GRC. Crypto in the morning, live every single day at 11 a.m. Eastern. I quit my job and going live every single day for 180 days or so, 200 days. Couple weeks in, I got a hold of Sam Stolt and I said, let's keep going, dude. This crypto stuff, it's the best. And it all comes to a head when these forks are coming out and we're scooping up millions and billions and bajillions of coins in a low liquidity market with a lot of speculation. Of course, there's risk in using all of these things: ETHw, ETHf, regular ETH. Playing around on the blockchain in general has collateral human error risk. But generally, if you pay attention close and you stick to the telegrams, you stick to the show, you won't really have much of an issue. But you've got to be ready for what you're doing. If you're nervous as crap playing with your computer, there's a lot of money on there. Step away from your computer. You're not ready. You don't have to be so attached to it. It's no big deal. So you just got to understand, like, this is just crypto. And if the people that are really good in crypto are not super emotionally attached to every single direction that everyone goes in, because they know low liquidity assets, product market fit, good communities, that's a good shot at a good token. Plus, we have it on chains for free all across the blockchain, guys. It's been extremely exciting to learn about all this stuff. And we're just going to go ahead. This is going to be a little bit of a powwow about all these concepts. We're going to show you some things we like about ETHf. There's some things the guy from Cosmos is running it, maybe a more future stability with the stable coin potential, since he's already pulled that off. But there's not so many miners and nodes. So there's pros and cons to both. But then on ETHpow, there's plenty of miners and nodes, but there's also a little bit less value potentially because those liquidity pools got bought up pretty strongly. And there's a lot to talk about, a back and forth. This between value. I meant Tron, not Cosmos. It's between value, security, what you're willing to risk. And what you find in the Hex community a lot is so many people stake so heavily that they're afraid to even interact with anything around that contract. And that's something that I'm realizing. I never over collateralize myself. Like, I don't put myself in situations where I can't act. I don't put myself in situations where I can't move, because generally, and yes, I do have stakes on accounts I don't really mess with, but it's not that much, because a little goes a long way when you know what you're doing. And then opportunities like this present themselves, because this is the blockchain. Opportunities will present themselves. So we got Jesse, we got Bullish, we got Sam. I've been up all morning hawking down deals. That's all I've been doing all morning, talking to my boys, figuring out what's going on. I was using the Uniswap front end for ETHf this morning. It was fine, but there was some issues. I'm not going to lie. There was some failed transactions. Jesse reminded us every time there was one. All right, guys, let's go into the break. DeFi proof, baby.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Smoking no blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stake. Got me some hadron, I'm making it rain. Pay me some maxi and that's just in case. GymRatCrypto sent me to show you the way.
DeFi proof.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Yo, what's Gucci? It is a wonderful morning. We've got like stupid amounts of stuff going on this morning, right?
It makes you want to just quit your job and full-time look at your computer, because there's so much golly opportunity staring you in the face. It's weird. It's annoying. I have to like pester Sam to like because I'm like, man, I know it sucks being stuck to your computer. It does. It's nice being able to move around and like go to the gym and like go to work out and stuff like this. But crypto makes you second guess yourself on occasion, your schedule. I mean, this is the first time in my life something has actually interjected into like my schedule, like where if I have to go to the gym, but then something happened, I'm like, oh, wait, I should stay here for this and then go to the gym after. And something like this, instead of in my life before I was like 6 o'clock gym, I would never do anything other than that. So this is important to me. It's really interesting as well as we move through these pairs. Sam, let's talk through, just so as we have a good beginning of the show for rewatchers. We have ETH, we have ETHw, we have ETHf, okay? And these all are accessible and tradable for US dollar. Okay, that's just the truth. I'm not going to tell you all the specifics. So what do we see here between the differences, the similarities, the pros, the cons of each one of these things as people frantically get to their computer to dump, to buy? Everyone wants action, and some people have a lot of money, so they dump. Some people have no money, so they buy. It's a very interesting spread of wealth that's occurring right now in a very low liquidity situation. So how much can they really dump? That's what I like to think about. So Sam, let's talk about it.
Well, so also we have the interplay of different philosophies for running a network. You've got, proof of stake, which is increasing centralization of a network, right? Which I don't necessarily agree with, versus POW, right? Which I do agree with. And I think is a more secure network, right? That doesn't necessarily mean everybody's going to take the same belief until something really bad happens, right? Then they're going to be like, oh, Sam told me fucking so, right? So we have that going on. Then you also have proof of work with ETF, right? The Fair Ethereum network. And that one, I don't have a lot of great understanding on it, like most of the community, but this community is like the best prepared for this. This morning, I was looking at the ratios between these, because the ratio is how everything trades in crypto. And there's definitely mispricing in here, which is going to create opportunity to go from one direction to the other.
Mispricing, and a bunch of us bought at very opportune times, some more opportune than others, and some more opportune than others a lot. And that's okay. Like, you're not worried about that. I'm not worried about that. I didn't get the biggest piece of the pie that I could have on everything. I'm not worried. Why? Because let this play out, guys. Chillax a little bit. Okay. If things do a 3x, people sell their shit. Okay. So just understand that at this point, there's enough liquidity where people are going to want to take some profits if they have free yield in a bear market. Use that as an opportunity. But I tell you, how low can HEX on the ETH chain go before these things reach parity? I do not know. Wait until you can match and provide LP between these pairs somehow. And then people are going to go bananas. There's
a bridge that the official Ethereum Twitter page shared yesterday afternoon for ETHw. Right, we're going to see other bridges, but you can do it through a centralized exchange too, which might be safer at this moment in time until I personally have more information on the bridges, right? But this is fascinating. Also, HEX on Ethereum, mainnet is down to 2 cents, right? And I think this is going to potentially continue, because this is, if you think of these as giant sand piles of money. And you have Ethereum mainnet, big pile of money. That's where they just placed everybody. But then some people wanted to move their money to a network that they trust more, like POW, right? Some people think that Fair is a good play right there. And
I'd like to show you an article that I want to know what this means to you, because I already talked to Bullish about this. It's a very quick article to explain, because it's not really about the details. It's more about the title and everything. So look at this, Sam. We have the first release, Ethereum Fair Global Ecological Plan and Opening an ETF Grant first release, Sam. And I'm going to read this a little bit, but it seems like they're paying people to build on their project. Okay, so that's what that seems like adoption related to me. And I like that kind of stuff, because I want a grant. I want it. Can CITM get the grant? I will work. I will do things properly. And just things like this, Sam. I love to learn and think, and that makes me seem more exclusive. So Bullish can probably explain this more, so I don't have to read the whole entire thing, because he was explaining to me all about this. And basically he was saying you can just apply. Go ahead.
Yeah, so essentially they have a grant program. They're giving out up to $10,000 USD worth of ETF for, to help you deploy your project, whether it's an NFT project, a DApp, a DEX. There's a lot of categories they're supporting. So, whether you were, building something and planning on launching it on PulseChain, this can be a great opportunity to get some money to launch it there and essentially have some marketing on another chain before, it gets copied over to PulseChain. Or if you were, currently thinking of doing something and you're looking for some funding, this might be an opportunity to apply and get some funding to launch something. But the fact that they're doing this is great, because they really care about supporting the layer one, bringing in new people into the system who are not only going to build stuff, but make it better.
This is interesting. Thank you for sharing that, Bullish. When you think about this, so this is what 2.0 does, right? That's what the Ethereum Foundation does in 2.0. They give grants out for people to build shit that they support or they think the ecosystem needs. And when you were talking about this, Bullish, I thought about the parties involved in each one of these. So we have ETHw, right? Who's behind that? The developers, right? I'm sorry, not developers. Well, there's some developers, but who's behind that? That is the miners. The miners, right, who have lots of money locked up in their mining equipment, etc. They have a vested interest in getting this thing to grow, right? However, now who's in charge of ETHf? ETHf is the same dude who started Tron, which is a top 20 chain, right? So you can look this up. It's related to
stablecoin action.
With a lot of stablecoin action and a big community in, I think it's Korea, Japan, etc., who utilize this. Now,
if you can pull
when
off
you look at those
in crypto, you're a top dog, because that's tough.
Within those two parties, miners and this guy behind Tron, just ask yourself this: who do you think is going to have a better idea of the bigger picture involved? Right? The individual, the individual who has run their own network, and now they're like, okay, I ran Tron, I fucked up here, I learned this here, I understand this could be better over here, and now they're creating their own version, and they've taken all those learnings to apply here, i.e., by paying for adoption, right? That's effectively what this is. Versus on this side, you have miners. Do miners have that foresight? Do miners have this set up? I don't know how this is going to play out.
Give me your honest opinion then.
I think that
from a human being perspective,
up until 7 minutes ago, right? Like, I think that Ethereum Fair potentially, because the dude behind it has a greater understanding of how to run a network, how to grow a network, how to increase adoption on a network. I think that might be a better player to have as a leader with Ethereum Fair than Ethereum POW, where it's a conglomerate of people. What happens when you have a conglomerate? It's just a group of fuckers together, right? Nothing gets done. Things are slow. You have groupthink, right? You have consensus that's slow as F, right? It's like you, me, and 17 other people trying to come up with an answer other than me just making the decisions, and the 17 other fuckers follow what I do, right? There's a big difference in this. And as I'm thinking about this out loud, I see the one with Tron behind it. I mean, he's clearly knows how to grow a blockchain. Do the miners know how to grow a blockchain? No. They don't. They've never gone through that experience, right? They're not the ones actually growing it, where he's the one thinking at a higher level. He's up here thinking about, how do I get adoption? How do I get people to build? I need people to build for people to come over here for adoption. Creating a grant, right? Will POW have that? I don't know. We'll have to see how this actually plays out.
I want to support Hex on all chains, because I think Hex is lit, and I think that we have a better chance of adopting to the entire world if it's this way. And I want you guys to hit the like right now and hit the retweet button on this tweet. If you have a second, go over to Twitter, hit the follow on Sam, hit the follow on me. We're all tagged in that tweet. Get your butt in there and seriously hit the retweet button for me, please.
Think about this. A lot of people in crypto like stable coins. They like to see the value of their crypto. They just like to see the same number every day, right? It's a psychological thing. Well, who the guy behind Tron? What is this guy's name? Please, somebody let me know in the
Is
chat.
it Justin? You also need to know the context of Justin's past.
Justin Sun.
Justin Sun, thank you.
So tell us, Crypto Gains, if you have any insight or articles you could share, that would be fantastic.
Justin Sun. Okay, so Justin Sun, who is in charge and created Tron, right, which is a very successful network, has the stable coin over there. So what is one thing that several people have brought to light with Ethereum Fair and POW? A lot of people in crypto there's a strong desire for a stable coin. There's a very strong desire to see that they have $6 million or $27 in crypto.
And that doesn't mean it's the best time to buy. That doesn't mean it's the best time to buy, though. That means there's more stability in the liquidity pools. But like, I think the best time to buy is when there is no stable coin because nobody trusts it.
Correct. But given that somebody has the experience running a network and helping to create a very strong ecosystem for USD over there, which chain do you think might have the possibility of getting a stable coin first? The side with him or the other side?
I don't know because I don't know enough about the Ethereum W because I bought it and I just did my stuff and I just kind of moved on to the next one because the news was right away. I don't know enough about Ethereum proof of stake to really think anything of it yet other than I want a position and I want it now.
I think that
so that's kind of where I'm at with it.
Ethereum Fair has a stronger probability of getting a stable coin up first. And I think that as we watch this play out, you're going to see if they can get a stable coin up there first, then that might be the network that wins in the end, right? Because one of the issues that some people talk about is a 51% attack with proof of work, right? And I believe, please correct me in the chat here if this is incorrect, but I believe the Ethereum Fair is proof of work. So one way that it is. Go ahead, Bullish. Okay, thank you. So one way to from my understanding, right, and this is elementary, is that when the best way to attack for 51% is through not being the biggest player, right? So if we wanted to attack a network, we're not going to be able to attack the largest POW network, right? We're going to have to attack a network that is smaller than that so we can garner the hash or whatever's needed, mining power, to go through and attack that at 51%. But there's also, I'm just going to go on a tangent here, but there's a difference here between POS and POW. Proof of work, in my opinion, is safer because you have a different, when you're joining a node pool. So a node pool is like I'm going to join a node pool so that I can mine blocks in that node pool, right? And then get a portion of the rewards in that node pool. How does that work? Because people are like, oh, well, 60% or 51% of the nodes are, centralized on say POW. When you take a look at that versus and you break it down and then you look at POS, POW nodes, that's just like I could own 16,000 nodes, but the individuals within my node conglomerate that is mining, right? They have the capacity and the autonomy. This is important because it doesn't happen with POS. If I do something or they change their mind, which means I have to control everybody in the node if I want to do a 51% attack. It's different than on the other side over here. So that means everybody in all of my nodes, I have to bribe GRC and everybody within there, because otherwise GRC can just take his node and point it in a different direction. And then I don't have any control because he has the autonomy. He has the ability to just take his node out and point it in a different direction. POS, That's not the case. Once you're locked up with the validator has control with what your money does, right? Also, with POS, you have the bringing together of validation and ownership, which is separate on POW. On POW, you have people who validate transactions, and they are not the largest owners. I have run a miner, and I'm mining, but I only get the portion of Ethereum that I'm mining. Joe Schmo owns a boatload of it. He is not mining, right? So you have the segregation of those two parties, ownership and the validation, POS. You bring those two together. And now GRC is like, let me take my $10,000 worth of Ethereum and put that with a validator so that I can earn some fees on this. Well, you have slashing, but you also now GRC loses the control. He cannot control what happens with that to the same degree what happens in a node and miners. A miner, I can just take my shit out and point it in a different direction. If you have that on the side with POS, it is far different. I do think that there's going to be a successful POW play.
And that's why all the smart guys are moving to it. I mean, we don't have to read between. There's 5 guys in crypto that know what they're doing, and they're clearly all moving to the same consensus network. So it's like, guys, I mean, I don't have to rewrite the wheel here, like, as well. Like, one of these things is going to adopt, but being involved in all of them as a larger player for $300 or $500 or $1,000 is a big deal to me. A very big deal.
Yes.
And not emotionally, just in as far as my financial position. Just like, I want that. I want more low liquidity buys when people are still fudding and don't know how to fuck with their computers and don't know how to get over there and don't know how to mess with anything and just tell people what they think without actually going through and doing it. I've been doing this for 7 days straight. It's not complicated, but it does take some effort.
It looks like so the other piece of this is the SEC.
Come on, Desi, if you're here, just say so in the private
chat, and then we'll bring you on. Yeah. So another thing is SEC. I think that's Gensler, might be how his name is pronounced. Gensler said proof of stake is a security now. You have the SEC stating that POS is now a security. Given that he believes it is now a security, what do you think his actions are going to be? What do you think the leader of the SEC effectively is going to push his team to do now that he can, because that's his belief, to control what he wants to regulate? He wants to regulate securities. That's what the SEC is for, regulation of securities. Now, POS, according to his definition, is a security. Do you want the SEC fucking looking at your shit, regulating your shit, fucking shit up? I don't personally care for that. So when you stack all these pieces on, I like POW far better than POS.
Jesse, I'd love your take on this. Come on,
Please.
Jesse, give us some of that.
So I think a lot of that.
Sauce.
I think a lot of that's just fear mongering. And even though the governments want to head in like super regulatory directions, sometimes those things take a lot of time. Like, they don't typically happen overnight. You know, they have to first off, they have to figure out what all this stuff is all about, and there's always going to be lobbyists on both sides. I mean, but they'll always say stuff, and they'll fearmonger, and that more often translates into the price action on the charts as everybody gets more scared. And then what you find later on is like, oh, it's really not that bad, right? So we're just gonna have to let that play out, because really we have no control of that whatsoever. You know, there's going to be proof of stake blockchains that we use, you know, such as PulseChain, and that's just the way it is, right? You know, if they're going to regulate it or whatever, well, that's above our head, right? They're not regulating us at the individual level. Even if it was a security or something, like, who cares, right? They can call Bitcoin a security, Is that going to stop people from buying Bitcoin?
I'm
No.
getting my money from Mexico.
Right?
now.
If they called Hex a security, which, you know, should never happen, is that going to prevent Hexicans from buying it and staking it? No. So who really cares?
No. Yeah, I feel the same way. The internet always wins when it comes to blockchain technology because of the transparency. Although Sam is right to think like, yeah, your rights might be taken away for sure.
It usually
like,
sounds much scarier than like it really is.
Yeah, because we're really buying like $500 at a time worth of stuff. And like we know that if it takes any kind of adoption, like our lives are just set for life. So it's kind of like it's a risk you pay for like dealing in the world's most volatile asset class, along with the rewards you pay. Volatility to me is a feature of crypto. I use it as a feature, not a bug. Like I like to use it on its upside, but just let it chill on its downside.
Right.
You know what I mean?
Right. Now, in regards to these two forks, it's interesting because it's almost like practice. The community, you know, the PulseChain community that's waiting for PulseChain, which should end up being far superior to these other chains, right? We all know that. We had already strategized. We talked about like, oh, when everything forks over, take our copies, you know, buy Hex with it or buy some more Pulse X or whatever. And then all of a sudden there's these new blockchains. And while they're not superior tech, it's like, oh, wait a minute. We actually have a chance to kind of practice what we were going to strategize. And it's really interesting. One of the things that Richard once told us was that when PulseChain forks, you're going to see people come over and they'll have a chance to become whales in the things that they want, right? Because of the ratio, things are going to be off. There's going to be opportunities there, you know. So he said on stream before, you know, to the broader public, if you like a particular token, right, you might have an opportunity to become a whale in that token. And like our community saw these forks and a number of people said, wait a minute, let's practice that. Let's see how that works. Okay. And play around. That doesn't mean like anybody put their life savings in or put, you know, even any substantial amount of money. It was really interesting. I mean, $1 could have got you 26,000 USDCs worth of any token that you wanted to play with. Right. So it was literally practice and prep, throwing change at it to get like a huge sum of tokens and say, okay, I see how that works. Now, with that said, though, you know, it's interesting that, and I made a tweet about this, when you play in somebody else's playground, when you go and you I'm not saying that we go and we support Justin's son and like from the standpoint of we're going to make your blockchain successful on the back of, you know, the Hexican community. Like, no, we already have a plan. We have PulseChain coming. That's going to be our blockchain of choice. However, when you go and you participate and you play with your free copies at a bare minimum, safely, right? Go through all of the same security measures that you would. This is crypto. There's always things that you have to do to protect yourself, right? Bridges are dangerous, right? Exchanges are dangerous. This has always been the case. Just because there's a fork, guess what? It's still always the case, right? So you always have to be careful. But if we are the prominent community that's testing these things out, playing with this stuff, and then we get seen on the charts, or you can see all the transactions on the chain, and it's like, okay, Hexicans are willing to come play. You know, they're not just
They're the only ones willing to come
kicking us in the dirt. They're playing around with their free copies. It kind of establishes like a mutual like respect sort of thing, where you would think that those same people who built that chain, when it's our turn to play in our playground, they're going to come play in our playground.
Oh, they will. I'm causing hell in all those chats. I want them to know my name and know Hex's name and know all of our names.
Right. It's all about adoption,
links.
right? So what I saw with some of your tweets, some of your stuff was retweeted by the ETH Fair Chain people, right?
Yes.
I think KG and maybe even yourself are going to be on stream with them just to ask them how things are going and what's like, get their take on a couple of things. Now, that doesn't mean the broader community needs to understand. This doesn't mean that like we're abandoning ship and it's like we want all of our stuff to be on there and this proof of work blockchain is going to be where we're going to thrive. And listen, there's no Pulse X over there. It's not Richard Heart's deal, but we're still willing to participate and play around and learn. Learning is what's important. And as you have these discussions with these other teams and ask them, like, what were your barriers? What's your challenge to get people onto your chain? We learn a lot of things that will help us on our own chain, which is PulseChain. And it builds that mutual respect between their teams and ours. And you would hope that they come play on PulseChain when it's ready.
What's your take, Jesse? What are you seeing around buzz, transactions, throughput, development between both of these takes? And then I have another question after I hear your take on fair versus W. Or he might have stepped away.
Like the differences and like, okay, so at the moment, it appeared ETHw chain had like a whole bunch of miners, maybe a couple hundred, maybe up to 300 miners or something. Transactions are, they're getting pushed through. They're confirming, people are being successful in swapping around their free stuff or the stuff that they've even purchased. Okay. And then when you go look at the ETHf chain, it's like, oh, wow, there's like 8 miners and the hash rate's through the roof and there are failed transactions. And then every now and then, as people slow down trying to do stuff, stuff starts confirming again. We have node operators in our community who will be spooling up nodes on PulseChain. So what's interesting is, on PulseChain, you're going to have like indexing nodes, you're going to have Oracle nodes, you're going to have even the validator guys, right? People who like to play around with nodes on their computers and process stuff that now are playing around, refreshing their memory how to do it all on these brand new blockchains. And they're actually spooling up their miners and stuff over there on these new blockchains. But when PulseChain launches, these are the same guys that are going to be running PulseChain, right? So it's really interesting to see that, to see our community like actually participating in the broader crypto sphere. I think we're just establishing a footprint. If we were to sum all of this conversation up, the Hexagon community is establishing a footprint.
Talk about that for a second, because this is the crypto space. If you believe crypto.com's annual report that there's around 3.5% of the world's population that is in crypto, right? And if you take that number at 8 billion, right, 3.5% of that is around 300 million people in crypto. Who is dominating, DEX screener for fair? Who is absolutely dominating DEX screener for POW? Right. So talk about this community.
Not even close. Not even like it's like there's only Hex and Hedron pairs and whatever the native chain is.
Yeah, there's some SHIB activity. There's a few other tokens that has some activity. But what's interesting is it really, most of all that volume that you see, it's kind of fake, right? Because when people had their stuff copied over, people had USDC in their wallet. They had Ethereum in their wallet. They had Liquid Hex in their wallet. They had Liquid that in their wallet. So like they could go over there and very easily swap out of their free stuff into something that they like. It doesn't mean it's going to be like uber successful over time. Time will tell, right? But it's like, well, if I have a choice to hold this copied over USDC or swap out of it, because these things go to zero in the event of a fork because there's no redeemability. What happened is everyone just starts trading out of their stable coins that were copied over into Hex. And it literally pumps and pumps and pumps that valuation of Hex, on the charts, even though it was all copied over value, and it's like kind of fake. It's not even. It's because it's just ERC20 USDC. It's not even a dollar value of USDC. It's just the ratio trading, and that ratio trading is what drove up, Hex to the top of the charts. Now, other communities didn't know how to do this. I'm sure even the SHIB community and some other communities, when they go over there, they see a stable coin and they see that, one stable coin, or one ETH or whatever is worth 26,000 stable coins. And then that ETH or that ETHf or whatever is only a single $1.30 on a DEX, right? So you're getting almost 26,000 of these USDC stable coins. That's not real value. That's not 26 grand worth of value. And I'm sure that's very confusing for other communities, but it's something like that we kind of prepped ourselves for, prepping up the PulseChain. Like literally the stable coins go to zero, and you can get a lot of them, even though they're not redeemable. You can get a lot of those when you bridge in and swap those into whatever you want.
And people also get confused because when people that don't understand these networks as well, they assume that the rate that they're selling their Hex for is so high that they're earning all of that actual dollars, but really the chain just hasn't validated those at all, and there's no liquidity, and so there's really just waiting to go to zero.
Yeah, the liquidity is super interesting, right? It's super interesting because you saw something that was like 19 mil, 20 mil worth of liquidity, on the charts, and then within minutes it was like, oh wow, there's only there's 5 grand worth of liquidity, and it's moving. People are realizing you can't get any of that value out. So they're like, well, why don't I practice liquidity providing? I've always been told there's 2 ways to get value out in a non-reckless fashion as far as price charts, right? You can do limit orders, which actually take the most value from the community, but it actually props the price up. It keeps the price up. Or you can liquidity provide. You can provide single asset liquidity and Uniswap V3 and just set your range, right? There's things that you can do which are responsible if you've got a large position of something. And the community is going to have to do those things on PulseChain. There's people who have substantial positions of what will be Pulse. They'll have to do some of the same things. They won't be able to get all that Pulse out. They'll look at their bags and it'll be like, oh, wow, I've got $50 million worth of Pulse. But if I sell, it's going to wreck the chart. So what am I going to do with this? So they'll decide, oh, okay, maybe I should just go liquidity provide with this. Okay. These chains actually give you the opportunity to kind of practice what all that looks like, because you're going to need those skills in the future over on PulseChain.
1,000%. And that was very nicely said. I think that the takeaway that I've seen above and beyond the learning is that I don't know how many coins are on, how many ERC20s there are, how many fucking NFTs there are. But when you go and you look, even though, right, the volume of the dollar value, that's why I'm not looking at the dollar value. I'm looking at transactions, because the transactions for me is more telling, because we know the dollar value is, not necessarily appropriate. But what the interesting takeaway for me was that how much of the top 100 on both of these new networks were dominated by this community, whether that's Hex and something or Hedron and something, on these both top 100 pairs on Fair and on Ethereum W, right? Because like Jesse was saying, we have gone through and run that mental exercise. So You know, if you've ever done sales, there's something where you practice, right? You role play this, right? You role play your sales pitch, you role play objections, you role play how things might play out so that you can be better when you're actually having that conversation with a lead, a prospect, or a customer. Now, what have we been doing? What have we been doing in this community? Effectively role playing, right? Mentally understanding how things work. And now, as Jesse's pointed out, right, one of the awesome learning things that's coming from this is that mental practice, right? Now it's like, okay, let's go talk to one customer. Let's go talk to a second customer, Ethereum W and Ethereum F, right? We've been able to role play mentally. I've been able to role play the dialogue back and forth with Jesse, with GRC, with Bullish, with 17,000 other people in the community about how things might play out. How is the bridge going to work? How are the ratios going to work? Where do you think this is going to go? You know, the stable coins, how are they going to play out, et cetera, et cetera, et cetera. And then we get our first customer, ETHw. ETHw comes in and we get to play with it. Go ahead, Jesse.
Yeah, exactly. So, you know, we have people in our community that are communicating with the devs over there and stuff, which I have to say, and this is not to be an insult, is more than our community is able to do. Right?
Explain that.
Explain that.
You know, it's challenging, right? There's not a whole lot of updates for one, but the support level that PulseChain gives to people wanting to build on it is about zilch, zero, nada. Okay. People have had to fork things like graph and subgraph for indexing services and all sorts of things like on their own because they simply just weren't getting any information even as to what was going on and what was needed to build up a successful chain. So like people just started building up their own stuff, right? And it's been very difficult because there's zero communication channels at all. You know, PulseChain is going to be wildly successful, but that dev communication sure isn't helping in that regard. Okay, and I'm not afraid to say that. What's interesting now about these other chains is, like they actually have open dialogue, open communications, and if not, like I said, if nothing else, we're establishing a footprint. When the time comes when PulseChain launches, it should be easy to say, hey guys, remember us? Maybe that Pulse or that ETHw or that ETHf chain wasn't everything you thought it was going to be. You know, it's still clunky. You know, it doesn't have all the protocols on it, you know, that you would dream of. We have the solution over here. Come play with us. Right, Richard built this thing, this PulseChain, and it is a proof of stake, but it's got all these tools and utilities on it, and it's fast and it's cheap, which is really ultimately what everyone's looking for at the end of the day. At the end of the day, the end customer, I mean, we have nerds that care. We have nerds that care about proof of work versus proof of stake. But at the end of the day, like a customer doesn't care. They just want to trade or buy or hold or get into their favorite coin or NFT or whatever it is, right? And I've given the analogy of like, if you go to a store and you're buying something at the store, you don't really care what the software is that the clerk is using at the register, you know, to take your money from you. You don't care. All you care about is that when you swipe your card, it's fast. You get your receipt and your goods and you leave, right? And I think most people feel the same way when they're operating in the crypto space. They simply want to go into something like Uniswap or Pulse X, buy what they want to buy. It feels like a good user experience and they leave and they don't even need to fully understand what's making that transaction work in the background. So ETHfair and ETHpow may end up, you know, continuing to feel a bit clunky. We have an opportunity to have established this footprint, have some open dialogue with those guys, and will be able to bring a lot of those users over to PulseChain ultimately when it launches.
Can I get your take on the POW and POS pieces? Because that's something I've been thinking about. I can agree. Like if you have, I've already put a stake in for Hex, let it run for 24 hours, took it out, minted my free Hedron. Like shit's fucking working over there. I get it. I can do transactions. Yes. Sometimes they fail on W, sometimes they fail on the other side. Right. I think we probably had that happen on 2.0. So it just happens more frequently on those ones. So there's some things that like in my mind might be an issue down the road. How important are you weighting that? Right. Because I see POS as far more centralized and much more risky, in my opinion, than POW. And I'm curious to hear what your thoughts are because you have a different point of view, right? You're founder of a couple of projects or with the founding team, right? What are your thoughts on this? Or you think this is trivial, but people like me are going to think about this, but a lot of people won't until like there's an issue, right? Until there's an actual issue.
The difference though, okay, so on a proof of work, anybody who's got the hardware can just spool up a miner and participate in picking up transactions and processing them. But that doesn't change the fact that like one single guy, like Cheng Pao or whatever his name is, right, can't own like 80%, 90% of all of them and just be the one who's like doing it all. So just because anybody can participate with any amount of money, as long as they have the hardware, doesn't mean that the guy with the big money doesn't come in and it's still centralized. So like when you look at the hash power that's all coming from certain places, and I guess some of that is from mining pools and stuff, but didn't Bitcoin all used to be mined in China? Like almost all of it. And it was that way for like over a decade, and it was all coming from like the same company, right? So people can say it's decentralized, all day long, but when you look at the transactions and they're all being processed by the same company, well, it's kind of centralized. You see the same thing in both systems, proof of work and proof of stake. The bigger guys come in.
But there's a delineation. This is what I want to ask you about. So there's a slight difference in that proof of work. I can mine, but I don't necessarily have the biggest amount of ownership. POS, I have to have a large amount of ownership in order to mine, which is validating, right?
Yeah, but
you're bringing
the
those
guys
together.
with the miners and the mining companies just come in and they just dominate regardless how much ownership they have or not. Right. And why are they doing that? They're coming in with big bags or big dollars and spooling up mining companies that just dominate the entire chain because they have, a large sum of the coins on that chain. Right. That's the only reason that they do that. So, it's really hard to graph all this out and definitively say that one is more centralized than the other. When you've got these huge mining pools or mining companies and proof of work, but then you have the big players who've got the quantity of coins they need, to be the validators on a proof of stake. Like it's almost the same thing. And one argument, just a small caveat, people will always say that miners are in it to extract value and dump on everyone's heads.
Not true.
Of course, they have electrical costs. They have some sort of hardware cost, and they're mining to, pick up some of the coins, when they process a transaction. I think the mining rewards on ETHf right now are like 70 or 80 coins, per transaction. That's like 70 or 80 bucks or something. All right. Every time you pick up a transaction, like, is that profitable? I have no idea. I have no idea how long your computer has to keep working before you finally pick one up. I have no idea. But the same thing happens on a proof of stake. You've got these validators that have a lot of sunk cost in those either their own setups that they're running on their own servers, or they're running through, centralized Amazon Web Services type services, and with backup servers and a security team in place 24 hours a day to make sure the thing stays up and running and it's good. And like, there's a lot of cost in that too. So there's a big potential that even proof of stake validators, they're earning, by the way, and they may end up selling some of that off.
Yes.
Same
correct.
thing happens on both types.
So what, Jesse, what do you think? Like, I agree. I was bringing this point up yesterday to a friend. You have running costs, right? The idea that miners are fucking just dumping on people's heads is the thing that Richard says, which isn't actually accurate. I talked to people who mine and none of them are selling, because everybody that I've talked to who mines has other businesses, right? And they're just like, I'm using this to collect bank, right?
Yeah,
like
interesting, right? Let me caveat real quick. Richard mined. He made Bitcoin rewards, 50 Bitcoin block rewards back in the day. And he says that he held and he sold the top at 70,000 or whatever, right? So did he dump on everyone's head all that time? Some people will sell some off, sure, but even Richard didn't sell. That doesn't mean all the miners are selling or not selling. You can't automatically say that miners are just dumping the price on everyone's head. And you also can't say that about proof of stake validator guys.
So, but since they're so, right, it's just the concentration, right? You have the concentration of the validation into a much smaller group of people. You have the concentration of validation.
But it's spread. It's spread across the delegators, though. It is spread across all the people who believe in that validator. So there's still a social consensus that proof of work does not have, right? People can literally remove their... Right. So with validators, you don't actually have to have all the capital. You have to have a little bit of capital. And then you just convince people that you're a good validator and they should delegate into your pool, so to speak. And then people just stake with you, and it makes you into one of the whales. And now you become a validator because you've got the most coins. You're one of the top 33 guys that have the hardware and have the most coins, and you haven't been slashed, in the past or whatever. So you don't have all those strikes against you, and you get the process transactions. But you have to share your rewards with that community that's delegated into your staking pool.
But there's a big difference. There's an incentive difference, right? If somebody does not have a large position in, Pulse or POS,
they don't need it. They don't need it. They just need to convince the community that they're a good guy.
No. But here's the nuance of this. If somebody doesn't have a large position, so somebody's got 50 grand, right? 100 grand. What do you freaking do? You're like 100 grand. But is somebody really going to take the initiative to spend thousands or tens of thousands of dollars to set up all that is needed to be a validator? I think not, right? Business owners, I know business owners, and they're not doing that. They're letting it go to somebody else. And to look at the real world to understand if this analogy, if this logic holds up in people's actions, we don't have to look very far.
But it doesn't necessarily cost just to spool it up. There's a
variable cost, there's operational costs, and there's the mental drain of this whole process. So there's not just one explicit cost. It costs 12 grand to buy the setup, but then there's a variable cost. Then there's also the risk factor for sharding, or not for sharding, for a slashing or whatever the case is. And there's a lot more costs involved over there versus, you present the argument that it is possible, which I agree with. It is possible. I could be a validator, but the probability of a small player being a validator is pretty low when you look at it. I don't see small players being validators. They don't have the financial incentive to do that. right? So that's where you bring together validation and ownership under the same roof, which to me is just increasing centralization, because you went from a boatload of validators called miners. Now you're changing the name and you're bringing together validation and ownership and reducing
But
the
I'm
number.
going to go back to my first points, though. That boatload of miners often are the same people.
Here's the difference, though. When you look at validators versus proof of work, right? So you have people who are running a node, so a pool of some sort, right? And please, if you have more information on this, I'd love to hear. Well, if I'm running in your pool, my mining, and I get the inclination that you're nefarious in some way, you're going to do something different, I have control over pointing my shit in a different direction. So like the idea that like the pools and all this is centralized, cool, it is, but I can just take my shit as an independent player, as an autonomous organization, and change what I do. But when you look at POS, if I give my shit to you as a validator, right? What do we know about centralization? You've got control over my shit. Doesn't seem a super intelligent thing to, right? Like, you're increasing the centralization from validators. You're increasing the centralization of ownership and
Hold on.
validation.
Proof of stake, a good proof of stake chain, your coins are always yours. You can always withdraw them at any time, and the validator actually doesn't have control of your coins.
You said proof of work.
Yeah, but proof of stake, like, you can still withdraw your stuff if you don't like the guy, or if you don't like what his validator is doing on the chain. You just withdraw your coins, and knocks him down the list, and he's out of the rankings. He can't process transactions.
But there's that risk, right? Where if there's a big difference because of the slashing, there's slashing on one side, there's not slashing on the other side, right? So if you fuck up my shit and then I need to pull my shit out, cool. Well, I just lost 20% because that's going to be spread over the pool of things.
But on PulseChain, you don't lose your initial capital. You just lose some of the rewards, which is like minuscule anyway. It's like, oh wow, I'm earning like 50 cents a day. Wow, oops, the guy had his computer down for a while. He got slashed. I lost my 50 cents for 24 hours. Like, it's not a big deal for the delegators.
So do you think personally that increasing the centralization from validators and owners, bringing that together, and reducing the number of people actually running transactions, as in going from a boatload of different miners that are acting autonomously to 32, or however the number is going to be on Ethereum, you think that's an intelligent move? And please, if it's so, I'm not saying it's not, I'm not trying to make light of it. Like, I am not seeing that as an intelligent move personally as Sam. I'm not saying that it's not going to be adopted. I'm not saying that, like, a lot of people, like, if that plays out into the future where you have, sharding, and you have, the other fucking 3 or 4 parts of the plan to reduce the load on the network and pulling out pieces from blocks so that you can, basically with the sharding stuff, the transactions can come down in cost. But I just don't see that as this is just going to lead to an issue down the road. In this moment in time, increasing centralization appears, because everybody likes this ESG shit, that it's a good thing. But in reality, in the long run, what do we know about increasing the power to singular players or reducing the number of players that have a say, right? It leads to tyranny. We've seen, like, the last 36 months, right? It's just not a good move. And I'm not saying that, like, I'm right. I want to honestly understand your point of view. If you think that POS is better, why do you think it's better? And why do you think bringing that centralization of validation and ownership together, and then bringing the numbers from a shitload down to 32? Please, I would love to hear your thoughts on this.
Well, it's going to be real simple. We can just apply this to PulseChain, since we like PulseChain. None of this matters. There's one entity who, like, holds 95% of all the coins anyway.
Yep. RH, right? Like, that's just another.
Hey, I'm chatting with
there.
the guy from the team right now on DM on Telegram. what is it, 12:02? What's your schedule, Sam? I'm just wondering. Obviously,
I'm down if you want us to come on quick.
he just said hi, but I sent on the StreamYard link and stuff. And hey, if you're watching this, I'm not going to say his name or anything because I don't know how far he wants to go as far as whatever. I don't want to say. But come, just join the link, and if you're below, I'll pop you up. You don't have to have your camera on. I understand that there's nuance to that whole entire thing, but we want to talk at a minimum because we want to learn about this stuff because you're probably going to say some stuff that'll knock our socks off that we don't know about.
What network?
Join the link, sir. So I sent you a link. I'm talking to him because he's probably watching the show.
Who is this?
Some guy that they referred to as the guy who worked on the team.
For what team?
ETHf.
ETHf. Okay, dope. If he comes in, that would be cool. Definitely be one of the interesting things about crypto, guys. Information is gold, right? You get to see this over the last 72 hours, right? As we had the fork happen, who's dominating the charts? Like people in this community because they had the information, and being closer to information in crypto is what gives a lot of people an advantage because the information is gold and like what's happening, what's going to influence people's behavior, what's going to influence adoption, how are things going to be played out into the future. So if this guy comes on, super interested to learn from them. If you guys just heard that, what I would like to hear what anybody else has to say why they think POS is better, using their own. I see a lot of regurgitation from Richard Heart, but using your own functioning gray matter, like what do you actually think without actually just vomiting up somebody else's words, right? Because a lot of people don't actually think for themselves, and they end up just regurgitating what somebody else has to say. I completely agree with what Jesse was saying. PulseChain is going to be super duper centralized, right? Doesn't mean it's not going to be like perform from a price standpoint.
It's a feature and a bug. It's a feature for some reasons, and it's a bug for other reasons. It's a bug because big investors don't want to come in when there's limited liquidity, and then there's also a founder that has all the shit who says penis online all day. So that's not helpful. And that's just frank. I don't care. People think I'm a Richard Heart D rider, but really I'm not. I just like the product that he came out with. I really think it's cool. I really think it's something. I don't like all the
Can I ask you a question on this?
Yeah, I agree. I agree with what you just said, right? So the PulseChain testnet feels 100 times better than these fork mainnets. It is easy, smooth, fast. So when Richard's telling us he's making it even better, like imagine how insanely good and the user experience is going to be compared to what these other forks are, right? So just keep that in mind. We all have to be patient, which kind of sucks, but should be a good ride when it comes out.
I agree. So either one of you guys, right? Why is crypto here, right? To be more decentralized and
user experience,
remove portions of the risks involved, right? So if that
but it's also very easy. Like I'm learning this about crypto as I get better with it. I'm like, this is way better. This is better. Even if somebody was hawking on my shit and looking at all my stuff and Nazi taxing me, I'm like, I could sit here at my desk and do this. Are you serious? This is lit. So I'm learning a lot about the user experience. And I think Richard's very concerned with the user experience. He wants it to be fluid, beautiful, nice, something that nobody could talk shit about. And I can't wait for that part of it personally.
What is your thoughts on the testnet or using like the experience to get onto these other chains? Similar to Jesse, where you have issues right across the board. I don't know. I'm curious to see how POS plays out in the long run as centralization grows, right? In nascent industries, which effectively is crypto. This just means like a new industry. You have a lot of players working independently to grow that industry. As obviously we see this in crypto. Now, if you look at other industries as they develop, as they grow, as they evolve, what happens is there becomes increasing concentration within the industries, so that there's not single players, a shitload of single players. It comes down to the much more concentrated level where it's a duopoly or like monopoly, or several gigantic players, and most people are not able to compete in this space. So
yeah, but I think the rewards will stay decent enough, long enough for just holding these assets that, like, I think Richard's kind of going for an adoption play too. Like, ETH's not super adoption friendly. It is like tech wise, but it's not like user experience wise. Like, I don't want to tell anyone to do what I've been doing over the last 3 days. Like, that seems very scary for you to be. My friends are hitting me up like, should I get Hedron? And I'm like, don't, fuck off. Like, just go away. You're not ready. You know what I mean? Like, you have to be pretty locked in to focus on this stuff. I wish I could get someone to stumble on their computer, not get hacked, and have a good experience with what we're doing. It's so awesome. It's so much fun. It's ridiculously fun. I love it.
Do you see that playing out in crypto though, where like if you look at the industries, it starts out with a shitload of players and then it gets concentrated as people go time goes on. Do you think that's going to happen in crypto? Where
someone's going to do it. Someone's going to make it happen. I'm betting on Richard right now, but it's up for who wants to be the best man, who wants to be the Elon Musk.
So you think that crypto is going to be even more concentrated as time goes on?
Yes. Well, it's just vertical or horizontal. It depends how it goes. Like, even Hex being forked, like, kind of takes control, and to a degree, because it makes it a more flexible system. It changes the dynamic a little bit. So,
yes, it will become more centralized over time, because there's never been a time in history, or it's rare, where the rich people become less rich and the poor people become more rich. Like, it usually is like the richer just get richer, and there's some lucky poor people who may make it into the cut and have a breakthrough. But like,
now savvy guys like me and Sam can really get ahead and make the world a better place too. I think it makes it easier for me. And I'm a pleb, like, Sam's not a pleb, but we're just random dudes. You know what I mean? And in a lot of situations in this world, a random dude cannot make it happen. Like, there's a lot. I know there's people without the internet, of course. I'm talking pre-internet, probably.
The uber wealthy around the world don't historically just shrink their wealth and give it to all the smaller people, right? So you tend to see more centralization and more as everything grows. It's just more and more and more centralized over time. Those people in power want even more power and more power and more power as time goes on.
And then there becomes guys, but I don't agree with that, because there's men that like to do things just for the sake of changing the world. Like, for example, in my opinion, Jack Levin is going for a distribution play that really doesn't allow him to have centralized ownership of the coin whatsoever, just because he doesn't have any, and the distribution's fair. So how's it
you have people that break that mold, but
so I'm saying, like, we're so early. Like,
that's mold that the world typically follows, with some cool guys that break out of that mold.
But because this is crypto, right, Jesse? Do you think that something like the Jack Levin's product, right, where it has a fair distribution and there's not centralization, do you think that type of thing wins in the end, given the ethos of what crypto is and decentralization?
Wins in what regard, right? Because
is the thing
the win as far as price action. Well, we've heard Richard say the exact opposite, that it's centralization of ownership, and low liquidity makes price move the most, right? So then you get another guy like Jack Levin, who says, well, spreading out all the coins, decentralizing them is best, right? Well, is it best for price, or is it best, like, what's the definition of best, and which one's going to be right?
Do we have an example of the way Jack is trying to do that? And can you think of an example in the real world where that has ever been tried before, or the pieces have been in place for that model to actually flourish? I don't know, right? Like, because we have plenty of examples to turn to with centralization, right? But we don't have as many examples to turn to in the other direction. Does that mean it's going to fail? Does that mean it's going to succeed? I don't know. I'm not sure, and I'm not fucking Nostradamus. So I don't fucking know what way he's going.
Yeah, I have no idea. We're gonna have to see all of this stuff play out. I'm gonna have to step away for a minute, but I'm gonna try and come back in here if you guys are still on in 15-20 minutes.
Thank you,
Okay,
guys.
cool. Yeah, I'm still chatting with this guy. They're just trying to make sure everything's cool, I think. So we could still talk about whatever. We could talk about you could pull up the deck screener, Sam, if you don't mind. Can you pull up the deck screener and check out both forks?
Yep. So I actually have
Let's look at some ratios for the people.
So let's take a look at this. So this is with how quickly crypto stuff is moving is the ratios as of probably about an hour or 20 minutes.
And let's
ago.
switch them once we get to that point of the conversation so we can show people how volatile, like these things do move very quickly.
Very, like I have a couple tabs open and I've been paying attention to this differently for hex price, and the hex price has already changed. But like, so right before, to give some type of context here, right before we're getting on, I put these together, like, 11:55. I'm putting out these ratios, which we'll get into, and then I'll talk about what I did. So obviously we have 2.0 here, W here, and F here. Now, if you look at these two things here, this is the price of hex here minus this one, right? These are the price in USD of hex, and these ones are the price of Hedron in USD, right? And you get to see that none of the prices are the same, right? The ratio within each network is below it, right? So if you look at this, the ratio of hex to Hedron, meaning you take hex and it should be division, right? So that's not a ratio. This divided by that, I think I actually calculated this incorrectly here.
Hey, Sam, stay here. Keep doing what you're doing with the people. I really appreciate it. I'm just going to jump over to a meeting with these guys because they just want to say hi to me, I think, before they jump on a show.
Cool. Will do.
It's the guys from the core team.
Yes.
All right.
Yep. Cool. I'll see you in a second. Tell them we'll say what's up. I'm going to continue going through this stuff. See you in a second. Okay. So we might actually have a special guest on shortly regarding ETHf, right? One of the developers or one of the people behind that project. Super exciting time. So let's get back into here. This is the ratio between hex and Ethereum, hex and Hedron right here. This is the ratio for on ETHw, hex and Hedron. And if we come over to fair, we have the same thing. And you look at these ratios, right? This is 9,700. This was 11,300. This was 13,000, right? So this, you would expect, right? The assumption would be that these ratios within each one of these networks, independent of prices, would be similar because everything trades as a ratio. Right?
Sam, real quick.
Yes, sir.
Where did you get this info from? Because the prices on Deck Screener is incorrect.
The prices, if you go to Deck Screener.
Okay, so that's pretty much what I'm trying to tell you. The pricing you're using right now is incorrect.
Yes, this data is old. This data is old now.
Right.
It's already changed. It's already changed drastically. So I'm not saying anybody should use this data to make any trades, or anything like that. This data is an hour and 18 minutes old, and I have the data up, and it is completely different than what is on the screen right here. This is just a snapshot from an hour and 20 minutes ago of what it actually looked like. Thank you for pointing that out, Bullish. Now, you would expect these to all go in a similar direction, closer to here, right? So if this is low, you would expect this to come up in the ratio, and that can happen in one of two ways. Because this is a ratio, right, between hex and Hedron, well, Hedron could come down in value or hex could go up in value. Same exact thing over here, right? This ratio is too high. This is 13 versus 11, right? So this ratio can change in one of two ways, right? Hedron can go up in value. That decreases this, or hex could come down. And these are exactly the shit that is literally played out, but that Bullish just mentioned. The current price, so I only have Hex up here. You could pull up Hedron if you wanted to, bullish. Hex on ETHw as of now is 2 zeros and a 104. Hex on the F network right over here, this Hex here, has gone down to 3 zeros, 81, right? So this has gone down in value. Right, so let's put this in point 0.7826, right? And then the price of the Hedron I don't have pulled up, but I can pull this up for you guys in just a second. If you guys work with me, we'll pull this up together. This is how I'm looking at shit. This is what I'm looking at as I actually go through these, and if I'm making any adjustments, etc. So now this is on the F network. We have 7 zeros. Let's see. So equals 0.123456 7 zeros 5625. So the ratio has changed. The prices have completely changed, right? On this side here, we have 0.001087. And let's check the price. So this is the W network now. Let's check the price of Hedron here. I'm gonna pull this up. We have 6 zeros 1192. So we have 0.1192. Whoops, 1192. There we go. And the price on the other network, I'm not going to actually check, right? Because 2.0. So we've seen both of these ratios change, and this doesn't mean that they're going to normalize like that, right? I was showing this on Twitter the other day on how this actually played out, where you get to see the ratios were off by like it was like 1 million to 10,000, and I was like, "There's no effing way this 1 million to 10,000 is going to continue to carry through," and it didn't. Within a matter of hours, it had actually gone through and corrected. What's up, G?
What's the verdict on the numbers?
I need to just sit here and play with them without trying to do the show at the same time.
All right, go ahead and do that for a minute. I'll talk.
Cool.
So they want to check out the stream I did yesterday before they come on. They're just a little bit, busy.
Set it up for tomorrow.
Yeah, so we'll set it up.
I'm actually glad they're doing that. That means they're serious and they care about their image.
Can I invite my producer in? Please. It's a doctor. He says, "My name's Dr. R." I'm like, "Hi, Dr. R. My name's Jimrat." So yeah, we're gonna be working on that, guys. I'm trying to get you that best price coverage. I heard the ETF on price on Dex Screener is a little rugged, so be careful for that. And if you could go to one of those swapping features, Sam, on ETF or bullish, and actually show us what those rates are right now, I wouldn't.
I can do it. And also, I just want to add to this. Like, keep in mind, pretty much ignore the prices, and you got to look at this as ratio trading.
Yes. Correct. 1,000%. This is
all. If you're stuck on the prices, you're going to be confused. So it's all about the ratios. How much are you getting for what you're willing to give up? This is exactly what's going to happen for the first 72 hours when PulseChain launches.
1,000%. Thank you for pointing that out, because this is exactly what is going to take place over there. That's why I've just been paying attention to the ratios on these things.
And we don't necessarily know which chain is going to gain adoption, guys. That's not really the point. But I want to talk to these guys. I want to know what's going on. I want to figure stuff out. But we already have a position, so it's cool. Like, why do I need to be like freaking out? But the people that freak out, the guys that have no position, the guys that are not willing to take risks, and the guys that are worried that this will work out rather than being helpful and providing liquidity and getting to it, because they have free coins anyway. Imagine if someone just wanted to be like a normal cool person.
Yeah, so at the moment, the ratio for one ETF, you're getting about 8761 hex, and if we change it to Hedron, one will give you about,
it's probably $1.40.
Looking about 56 million. 56 million.
Okay, perfect. This is it. Yeah, here we go. I'm sorry.
This morning I bought, I think, like 10 billion or something. So just playing around, guys, just having a good time. You know what I mean? It's like what, $50, $100, you know, it's all about
Yeah,
that.
if you picked up a big hex position and you're willing, you know, let's say you want Hedron,
Yeah, which we did yesterday. We picked up a dirt cheap hex position.
you know, you'll get, you know, and this is
13
especially if you
million,
got in early on hex and you're in the ratios worked out in your
1.3
favor.
billion.
There you go, 1.3 billion.
So can I show you guys something? Because literally we were on the phone with Jesse here, and then we got onto the show, and I said to you guys in the chat, what did I say in the chat? I was like, hey, I'm switching my bag from hex to Hedron.
Yeah,
Because of the ratios of what was actually taking place. So what do we got? And this just shows you that the play that I just did is exactly working, right? Okay, so I switched over a bunch of ETH of HEXW to Hedron because I thought that this was going to take place. What this means, because I was looking at these ratios, I was showing you guys right before we got on. The ratios of bullish was where I don't think GRC was there, but I was showing you guys these ratios and it was off. So I was like, let me take my hex and convert it to Hedron. Now this is the ratio between hex and Hedron. So we had thought that somebody was going to be dumping some hex, and I don't know if that was the case. Whatever it was, but if just people believe that, they're going to take actions to do so. So by switching from hex W to Hedron W, hex tanks. Now what can I do? I can take my Hedron, which is held up better to hex. As you could see, this is the chart that shows you this. This means Hedron has held value better than hex has. I can take that Hedron that I converted out and get back into hex and have more hex available because of what has just taken place. I was like, oh, wow. Because we were just talking about that an hour and 20 minutes ago. And I was like, oh, let me switch over, you know, a couple hundred.
Hey, Bullish, they need you in this chat, and they want to do it today. They saw our video and they like it. So,
Yeah,
and I'm not saying we can do it right now, but I'll send it to you in the private. Yeah. So
Cool.
they're like, okay, I must have had a great monologue. You know, the manic.
And if they see it, they see like we're supportive of all of them. It's not like we're picking sides, you know, like pretty much wherever there's hex, you know, Icosa, Hedron, and all the stuff we love, Maxi, all the perps, we're gonna support it. Like it would be foolish for us not to support like the asset that we love.
100%.
Do you want to stay on and see if we can get these guys on?
Yeah. But
well, we might have to set up like a new stream, so
cool.
we can end the show and then guys like just be on the lookout for Twitter and
yeah,
stuff.
we'll
like
end the show. We're gonna probably do later.
So guys, if you're watching this now and you want to see what the developers have to say for ETHf, there's a notification, right? So if you're watching on my channel, if you're watching on GC's channel, or you're watching on Crypto in the Morning YouTube channel, you press the subscribe. Right next to the subscribe up a little bit, there's a bell notification. Press the bell notification because it looks like we probably are going to be coming back on in some period of time with the developers for ETHf. So if you want to catch that, if you want the information before everybody else has this information, make sure you go through and do that.
And
This is
real
as
quick before we
insider as
sign
it
off,
gets,
like
guys.
real quick before we sign off, because I get excited when I see stuff like that. Like right, like I just went into the Ether Fair, you know, stuff because you know people are saying like, yo, we need miners, we need stuff like that. And I'm pretty much telling them like, yeah, like our community are spinning up. I'm gonna be spinning one up very soon. Someone's like, oh yeah, it looks like we have strong support here. And I basically responded, I support anything where hex is on. You know what I mean? And everyone the response is like, yeah, I need to learn about this hex. I keep on hearing about it. Like this is the stuff I like to see. Someone who has absolutely no idea about hex and now has some interest. You know what I mean? They have no idea of like everything that happened in the past and all the gatekeeping and stuff like that. They just see hex dominating on their chain and they want to learn more.
Yes. Awesome. Cool. This is exciting, guys. This is super exciting. Thank you for sharing that. Do you guys want to wrap things up with some DeFi proof? Keep on the lookout on Twitter. Links are my Twitter's down below. GRC's Twitter's down below. I think Bullish's is down there as well. Highly recommend checking us out on Twitter because we'll be tweeting stuff out too.
Yeah, please follow my Twitter, and I dropped the link below. Retweet it, let everyone know, but hit the bell notification so you know I'm going to be tweeting all these thumbnails out, so you'll know exactly what it is. And if there's any live Richard Heart coverage, I'm going to be at my desk all day, so I'm going to be on a little keep an eye out for that as well.
Yes,
and I'm going to be here. I'm full time, baby. Trust you, me. I'm not trying to scam anyone or do anything. I'm trying to teach people and do these opportunities myself in real time. Like I'm going to be up on my computer after this shit. So and I get most of it done before the show now, but in general, like I give you this information right when I get it. And then now we're talking to the founder, and now you get an opportunity to talk. Rather than gatekeeping, all you have to do is be more open and more creative and more learning and more adding value. Rather than sucking value out of everyone, you could do two things at one time. Like, but if you're on vacation, you're on sleepy mode, like that's just not how it's going to work. Like it's not. So everyone, make sure you're subscribing, hitting the like. Crypto in the Morning every single day. If you want to donate, there's an address below, guys. Everything that you do, hitting the like, hitting the subscribe, and sharing this out, it helps me a F ton. And I'm going to take over anyway, so help me out. Let's make it quicker. Let's get Hex to the moon. Do all the shit. Ethereum to the moon, scaling to the moon, better interactions to the moon, better world, better life, better cryptocurrencies, better future technology. I'm in for the long haul, Sam. Let's friggin' go. DeFi proof, guys. Everyone have an amazing day.
Peace.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phones.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phones.
Crypto in the morning. Crypto in the morning.
Ready to take notes.
Smoking a blunt on my way to the gym. 11 a.m. and already tuned in. Got me some hex and I'm making a stake. Got me some hedron, I'm making it rain. Pay me some maxi and that's just in case. GymRatCrypto sent me to show you the way.